channel members have been asking me about Visa stock, my thoughts, my ratings, and my price prediction or fair value calculation. And so I'll reveal those in this video here. I'll answer what I believe Visa stock is rated, whether it's buy, hold, or sell, and I'll reveal my fair value calculation for this business.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So I calculated a discounted cash flow valuation for Visa, and the intrinsic value per share I came to was $455. The current market price is $340, making Visa stock look undervalued based on my discounted cash flow valuation. But that's not the only thing I consider when I'm deciding to rate a company buy, hold, or sell, and this is for my personal recommendations, and I followed these recommendations for my own portfolio. So let me take a look at Visa's longer term performance to determine what I think about the company, whether it's buy, hold, or sell. Looking at its revenue growth over the previous decade, the company does look impressive. It's increased its revenue from 13.9 billion in 2015 all the way up to 39 billion in the most recent trailing 12-month period. That's good for a compounded annual growth rate of 11.5%. That's a strong growth rate for a company like Visa, which you might expect to be a much slower growing company. Furthermore, Visa benefits from the increase in inflation because the company generates revenue based on a percentage of the transaction value. I also wanted to evaluate its return on invested capital, and this too looks really strong, increasing from 16.8% to 26.2% in the most recent period. Now, as you might already know, I like to compare the ROIC with the WACC. So let's go back to my weighted average cost of capital in my discounted cash flow valuation model. And according to this model, I calculated a WACC of 9.2% for Visa. I applied a cost of debt of 5.5% given its lower risk profile, and I used the capital asset pricing model to calculate a cost of equity of 9.6%. I applied a target capital structure of 10% debt and 90% equity to arrive at a weighted average cost of capital of 9.2% for Visa. Comparing that with the ROIC of 26, the company has an almost 3-to-1 ratio ROIC to WACC, which is incredibly strong. That means the company is generating shareholder wealth. Anytime you have a company with a return on invested capital that's greater than the weighted average cost of capital, that company is increasing shareholder wealth because whatever it costs the company for the capital it's using to deliver products and services, it's exceeding that with the returns on that invested capital. That's a general rule of thumb I apply to all investments I consider. Now, I also like to look at valuation on a forward price to earnings basis, and Visa's trading at a forward PE of 27.4, which looks relatively undervalued given the company's growth rate, expanding returns on invested capital, the competitive position in the industry. I like the competitive dynamics in this industry. You don't see Visa and MasterCard and others fiercely competing against each other with promotions, incentives, and decreasing fees with merchants. You rarely ever see that, and that's attractive for investors. You like to invest, or I like to invest for sure, in industries with level competition and competition decreasing. I despise investing in industries that are undergoing fierce competition. It's one of the many reasons I've avoided all electric vehicle companies in the previous 4 or 5 years, and that served me incredibly well as many of those EV stocks are down over 90-95%, with many of them going bankrupt also. So when you see an industry that's undergoing fierce competition, you should try and run away from that industry as fast as you can. It alleviates some disaster scenarios. This industry is almost the opposite of the electric vehicle industry in terms of the fierceness of competition. Whether I'm looking at the valuation on a forward price to earnings basis or whether I'm judging using my discounted cash flow basis, Visa stock looks undervalued. I like the competitive dynamics, the total addressable market, the customer value proposition. It all looks really strong for Visa. So I'm rating Visa stock as a buy. Actually, I own Visa stock myself. I've owned Visa shares for quite some time, and I would be interested in adding to my existing position for Visa in the upcoming weeks and months ahead.
Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.